Hello, welcome to another video by Indicator Vault. And in this video, we're going to go over the top bottom finder. And this is a great indicator for spotting the beginning of trends forming. And as you can see here, we've got this line and we've got the signals. And this is using basically a kernel smoothing type method with obviously some other factors into its algo. So it's, price action and such to give us these signals. And we're going to go over these examples here. And we're just going to stick with the NQ, the daily chart, because the signals here are incredible just with this chart alone. We can see one here catching this big up move, one forming here, pushing down, and then one here pushing up, and so on and so forth. We're not going to go so much into these ones, but I will touch base on them a little later. But these are such great examples, just these three right here. Let me first zoom in to this first one here. And one thing to note when you're looking at the kernel smoothing here, the best signals are going to form when price is typically has pushed away from it. So as you can see here, obviously this move down is pushed away from it, and then we see a signal form, right? So typically your uptrends are going to start below here, and then obviously as we see, your downtrends are going to start above it. And really just with some simple price action concepts, you can find some great setups. One that I like to use just for finding a typical market structure shift is finding, here we go, a gap down. So for instance, since we're looking, we've got the uptrend signal here moving away from here, and we have a gap. Once that gap is filled to the upside, that would be enough for me to look for a market structure shift to the upside. And then we can just simply take the low and the high that forms. Here's the 50%. It dips down into the discount part of the range and actually never even closes below the 61.8. That's a very popular fib level. I personally don't use that one as much, but again, just to go over, there's a gap. We have a close above it with these candles here. Still plenty of gaps here. It's not the cleanest price action, but we have the uptrend signal form. So we can then start looking for entries. And of course, it dips into the discount range. Only wicks below the 61.8. That's this green level here. And then totally flies up with such a, humongous up move. Obviously first level take profits, would be maybe this high, but ultimately you could look for this high, which it easily breaks. Leave a runner. You could easily leave a runner with this indicator until you find the next signal down, when it's going to tell you when the next strong down move is going to form. So if you did that as you're taking profits here and then some here, leave some left on the table for the rest of this huge move up. So I hope that makes sense in that example. And let's move up to here. Get rid of these drawings. And one thing I also wanted to make note of, as you are seeing this huge up move, we're not really looking for any more buys. Obviously, maybe with some other confluences, you could have looked in for this retracement here. But even this, such a long wick down and immediately pulls back up. And then just a couple of days later, another strong move, showing very good signs of bullishness. But a trend cannot last forever. And so since it's already showing such a strong up move, you want to be careful, for keep buying and buying and buying as it's starting to poke above here. Because again, like I mentioned, the downtrend signals will form above here, just like we saw the uptrend form below it. So as it's starting to poke above it, that's our sign that, okay, maybe sit on our hands for a little bit. We could start to see a reversal soon. The trend has to be exhausted at some point. And that's what we see here. Now, yes, we see this sell signal form. And we see another, kind of a small push up. But I'm going to put a fib on here and show you kind of how I use some deviations. All right, so here we are with the fib I've put on, anchored from this high. This is the most recent swing low, or I should say push down. Taking that swing high, and then the low it forms, anchoring the bottom of the fib onto that low. And then I have basically it says 200, but it's the one deviation of this range. So basically taking this range and then one standard deviation above it. Seeing that this sell signal is formed, seeing that it has pushed away from here, I can reasonably expect price is going to start to move down. But if you take, this sort of standard deviation philosophy or concept, of the most recent swing high to swing low, or at least the most obvious one, I would not expect price to push above here. So I'm expecting price to stay below the first standard deviation. Again, just with these other, theories and concepts applied, such as the indicator telling us to start looking for a downtrend and that this uptrend should be exhausted soon. So then what do we see? One last up move, a huge engulfing candle down, basically giving us that confirmation, okay, price is ready now to start moving down. And as I move this fib, I anchor it there with the bottom anchored to that low. What do we have? Price just barely wicking 3 times into the premium side of the new range and just completely tanks. So again, with this example, just taking into account price has been poking above the kernel for a while. We're starting to believe that the uptrend is exhausted. We then see the sell signal. Even though we do have a little bit of a push up, that's not scaring us because we've used some other, fib work and just waiting for that impulsive move as well. Even just, common sense price action will tell you, you don't necessarily need to enter here. You certainly could, but we want more confirmation as well. And so even without the fib work too, just this waiting for a candle like this to form. And once we see that, that's our confirmation as well. It's a huge down move, barely a retracement into the premium, and then just completely tanks once more, moving well away to the bottom. And so we use that same logic. We have a very strong, this one didn't last as long as this up move, but a super strong and very quick move down. It takes out this low, as we see here, quickly wicks back up. So even price action concepts are telling us it took liquidity and may want to start moving back up, along with the fact that it is had a strong impulse away from here, well below it. And then we get a strong up move. Again, similar to, get rid of the fib, similar to something like this. Strong up move and then a big engulfing candle. Strong down move, big engulfing candle with the buy signal. And what I'd like to use or look at, and this is just kind of some order block concept as well. Again, if you look for gaps to be closed, we see it closed here, so that's your market structure shift. You could have caught this move up, but look at where. So I move it to the opening price or the high of that candle. Look what we have here. As soon as this candle closes, we get that uptrend signal. Price retraces right to the opening price of what I would consider an order block, just because it took liquidity, closed as a down candle, price trades above it. You could have entered right there and caught this move up. But even if you wanted more confirmation, yes, you would have missed out on this, big move up. But again, take the range that price is in. And look at that. Retraces back into discount, 61.8, a great level again right here. Wicks just below it. And again, taking into account price is below this. We are not, we still have reasonable confidence that price can still continue to move up. A strong retracement back. We still have this high, and obviously ultimately this high that has not been taken yet. So we can just see this as a retracement. We have no sell signal up here. So we're still thinking uptrend, that we can still see the beginnings of a strong uptrend. And that's exactly what we see. Even though, you could have, if you're nimble and quick, or if you were able to see it right as it dipped down below here, you could have got this move, but price offered another great entry right here at the 61.8, and price just continues to move up strongly. And then what do we see here? You could have, left a runner all the way until you see a sell signal. We see a strong up move well above here, engulfing candle, retracement, move back down. Not as much of a move, but again, still a trade that could have been taken. Same thing here. Price well below here. And like I mentioned about watching for a move above or below it, we see here, sure, a little bit of a move, not much, but price is getting really messy, really choppy and consolidating here. There wasn't really much of a strong move away from the kernel smoothing here. That you would just need a lot of more confirmations, in my opinion, to look for something like this. Whereas these, identifying a strong up move above it with the sell signal, you can be much more confident in taking something like that for a down move. And again, these examples here were just perfect examples as well. So I hope this video made sense. And until next time, best of luck trading.